Nvidia set to report first quarter earnings on Wednesday. Options traders tracked by Bloomberg predicting the stock will likely gain or lose as much as 7.4% the following day. That would be a lower level of volatility than what we've seen the last 8 quarters, with an average swing of over 11%. Joining us now, we've got Sean McLaughlin. He is All-Star Chart's chief options strategist. Sean, great to speak with you. I know you've sent over in your notes that if you were trading Nvidia right now, you'd be positioning for a neutral to positive earnings reaction. Talk to me about why that's your base case.
So what I tend to see happen when earnings events happen is that if there is a surprise move in the market, that surprise move tends to happen in the direction of the underlying trend. And there's no denying that the underlying trend in Nvidia and all of the quantum stocks has been up, coming off the Liberation Day lows. And so if there is any surprise, I think Nvidia is going to be higher. I'm not necessarily predicting that we will have a huge pop higher, but I think if there is one to happen, odds are it will be higher. I think more likely Nvidia is going to have maybe a little a muted response, a little underwhelming response to the market or to expectations, and therefore, as an options trader, I want to play this earnings event with an option spread that pays me whether the stock goes up, the stock goes sideways. Really, I just don't want it to go down very big. That's the way I'm playing it.
Sean, can you operationalize that for me and for our options traders listening? What exactly is your approach to that?
Sure. So I'm going to utilize an in-the-money call spread, a vertical spread that it consists of an in-the-money option or in-the-money call and an at-the-money call. So what I'm doing is I'm leveraging the fact that there's a lot of premium at the at-the-money strike. So looking at NVIDIA right now, it's trading at 130, in the neighborhood of 130. So I want to be short the 130 strike, but I want to buy the 120 strike. So there's $10 wide difference between those strikes. And I want to position in the options that expire next Friday. That's May 30th. That's the soonest expiration following earnings. And because I'm getting a lot of premium to sell that 130 strike right now, if NVIDIA were to absolutely crash, I don't think it will, but it could, right? It could happen. Well, playing this event with an option spread, I will be better protected versus, say, a normal stock trader. If I'm long Nvidia stock and the stock gap's down to, let's say, 110 or 120 following earnings, I'm going to lose a lot more money had I been positioned in stock versus the options, because of the fact that I'm selling premium at the money strike, which really gives me a lot of cushion.
Nvidia's stock has risen more than 20% this month, and the chip giant's Q1 results are less than a week away. With the majority of Nvidia's large tech competitors using the company's own processors for their AI initiatives, the recovery has exceeded the overall indexes and led the Mag 7. The combined spending of Amazon, Alphabet, Microsoft, and Meta platforms is projected to exceed $300 billion in 2025, with over $500 billion in corporate investment in AI anticipated in the United States alone. Nevertheless, with Nvidia scheduled to disclose its Q1 report on Wednesday, May 28th, let's see if the rise can continue. The AI explosion has increased efficiency and productivity, making it a very significant time to think about big tech firms because of their steroid-like stimulus for ultra-growth potential. However, there are worries that higher AI spending would reduce shareholder returns, particularly if the trend fades or the economy contracts. As Nvidia concentrates on increasing the manufacturing of its Blackwell GPUs, the most sought-after and highly effective AI chips available on the market, CEO Jensen Huang projects that the company's investments in AI will increase by more than 300% over the next 3 years. At the same time, Nvidia's capital expenditures have increased by more than 200% to nearly $3 billion this year. According to its most recent 13F filing, Nvidia also owns 24.12 million shares in CoreWeave CRWV, a provider of cloud computing and AI infrastructure. Simultaneously, Nvidia recently revealed multi-billion-dollar deals outside of the United States and China to supply chips to Humain, Saudi Arabia's new AI firm. Estimates indicate that Nvidia's Q1 sales rose 64% to $42.64 billion from $26.04 billion in the same period last year. In terms of profitability, Q1 EPS is anticipated to increase 39% to $0.85 per share from $0.61 in the previous period. Comparatively speaking, Nvidia's Q1 sales would represent an 8% increase but a 4% drop from Q4 earnings of $0.89 per share. After retaking its prior 50-day simple moving average, SMA, of $100 per share in early May, and then soaring over its previous 200-day SMA of $125. Nvidia extended its bullish ascent in relation to its most recent gain. The goal of technical traders is for Nvidia to stay above its 200-day SMA, which is around $126 per share at the moment. Red line. With Nvidia rising from a previous 52-week low of $86 per share in early April, a post-earnings sell-off that extends below the current 50-day SMA, green line, of $114 would indicate a bearish decline. Nvidia stock is currently trading at 30.9x forward earnings, which is not a disproportionately high premium over the benchmark S&P 500's 22.5x. In terms of PE value, Nvidia is notably positioned in the middle of the Mag 7, outperforming Alphabet, Apple, and Meta while providing a discount to Amazon, Microsoft, and Tesla. It's interesting to observe that Nvidia is trading far below both its median of 55x and its peak of 122.1x prospective earnings during the last 5 years, given that the company's stock has experienced market gains of almost 1,300%. Next week's Q1 report will see Nvidia's stock rank number 3 hold. With the chip giant's incredible sequential growth beginning to wane, investors will be closely examining Nvidia's capital expenditures and expectations, which could lead to improved buying opportunities after such a dramatic surge over the past month. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
I mean, look, you are well positioned on either side. I'm just curious why there is still such, I guess, or there can be pessimism going into this, especially because, as you mentioned, I mean, typically they do surprise. On average, it looks like the stock is likely to gain or lose as much as 7.4%, though. So where is that pessimism coming from?
Well, I think there's still lingering doubt. There's lingering, PTSD for what has happened in the market recently, and even today with what we're seeing with the tariff news driving, market jitters a little bit. So there's always going to be fear, and Nvidia is one of those names that everybody watches. It's on everybody's radar, and you're not only do you have people who are perhaps fearful and they're protecting their positions using options, but you also have speculators who are driving the prices of calls and puts higher because they're making aggressive bets that something may happen. We've seen what happened with the quantum stocks yesterday. You guys were just talking about D-Wave and IonQ and Rigetti. Those stocks had huge gains yesterday. I mean, 20, 30%, I believe, is what I saw. And seeing the pullbacks that we have today in those names are only down 1 or 2 or 3% right now. That's a very mild pullback following a really strong day yesterday. So all of that to me speaks that the setup is there for Nvidia to at least not disappoint. It may not make everybody excited, and we may not see a 20% gap higher, but I think the market is positioning for Nvidia to be neutral to higher, and that's why I'm trading it this way. Are people pricing at a 7% move? Yes, it's a popular name. People are looking at it as a bellwether. I think it's more speculators that are driving that, though, than fear.
Okay, I like that. One of the fun parts about doing earnings and covering them is you see the initial movement based on just the first print, and then you get the earnings call, and then it does all kinds of things. Stocks will do all kinds of things. For me, Blackwell has been the key word that I've been listening to the past couple of quarters. With all of the deal making, though, in the Middle East and this new partnership with Humane, this Saudi Arabian AI company, is that going to be something that you're listening for in the commentary?
Well, I hate to disappoint you, Hope, but I'm more of a technical guy. For me, only price pays. For me, all the truth is in the price. And I could listen to conference calls and I could hear what everyone's saying, but they're a little bit biased, right? They're trying to spin a positive story and keep everybody engaged and keep investors happy. And nothing wrong with that, but for me, it's all about price.
Sure.
And the price will tell me what I need to do next.
But there are other people, other traders who listen to this and their price impacts you. So how many people do you think would be listening for this specifically, given this is the season right now for tie-ups and partnerships? I mean, they just showed up at Microsoft's, conference the other week and talked about their partnership. So I think that's sort of what I'm coming from, is that, yes, they're going to talk up that big game during the earnings call, but I do see that they're trying to show that there is potential beyond their current product stack.
Oh, absolutely. I mean, NVIDIA is the name, right, that everyone's watching. They're looking for clues for AI, for quantum computing. I mean, if NVIDIA says anything that spooks investors, that affects the entire space. So yes, people are going to be paying attention. They're going to be trying to read the tea leaves and read the clues that are said. I mean, we have body language experts that will look into that stuff and see how people are reacting. I mean, it's going to be overanalyzed to death for sure, and there's going to be a lot of meat on that bone for people to analyze. But again, for me, it just comes down to price. The price is what will tell me where we need to be.
Since becoming office, President Trump has drastically altered U.S. trade policy. Some investors have lost faith in American stocks as a result of his administration's tariffs, which have raised the average tax rate on U.S. imports to its highest level in decades. As a result, this year's benchmark indexes in Asia, Canada, and Europe have outperformed the S&P 500, the greatest indicator of the U.S. stock market. Additionally, the index has lagged stock markets in numerous African nations as well as emerging economies like Brazil and Mexico. However, Jamie Dimon, the CEO of JP Morgan, recently told Bloomberg that the United States remains the best country in which to invest. Even if all of your money were concentrated in one nation, it would still be America. I mean, it's still the most prosperous country in the world. In fact, 21 of the 25 biggest companies in the world are American, and Nvidia and Amazon are among them. Here's why those stocks are wise long-term investments. Crucially, the AI revolution is still in its early stages, even though generative AI has been making headlines since ChatGPT launched in 2022. Nvidia has the hardware and software necessary to develop autonomous robots and self-driving cars. We build technology that almost every self-driving car company uses, CEO Jensen Huang told analysts earlier this year. In the fourth quarter of fiscal 2025, which concluded in January, Nvidia announced impressive financial performance. Due to the robust demand for data center hardware brought on by the AI boom, revenue increased 78% to $39 billion. The diluted shares non-GAAP net income increased by 71% to $0.89. A 3-point drop in gross margin was the sole setback, but CFO Colette Kress predicts that number will rise as Blackwell GPU sales soar this year. Crucially, since the majority of its chips are produced in Taiwan, Nvidia is not exempt from tariffs. However, since the Trump administration has not approved levies on imported semiconductors, it is unknown how much the company may be affected. However, Nvidia recently began producing chips in the United States with assistance from Taiwan Semiconductor, and next year, output will expand. Through fiscal 2027, Wall Street projects that Nvidia's adjusted earnings will grow at a rate of 37% each year. Given that Nvidia has outperformed the consensus estimate by an average of 10% over the last 6 quarters, the current valuation of 44 times earnings appears to be rather reasonable. Shares should therefore be owned by investors seeking to profit from the AI growth. Although Amazon operates worldwide, slightly more than 2/3 of its revenue comes from the US. It is the third largest ad tech firm globally, operates the biggest e-commerce marketplace outside of China, and, in terms of infrastructure and platform services spending, Amazon Web Services, AWS, is the biggest public cloud. Considering that all 3 areas are expected to grow rapidly in the upcoming years, Amazon is well positioned for long-term success. Grandview Research projects that through 2030, cloud computing sales will increase at a rate of 20% annually, digital ad spending will increase at a rate of 15% annually, and online retail sales will grow at an annual rate of 11%. Amazon's first quarter financial results were strong. GAAP net income increased 62% to $1.59 per diluted share, while revenue increased 9% to $155 billion. However, management provided careful direction. Operating income for the second quarter is predicted to range from $13 billion to $17.5 billion, representing growth of between -11% and +19%. Tariffs are the cause of the uncertainty. Crucially, just because Amazon generates the majority of its revenue in the United States does not mean that it is immune to tariffs. According to Morgan Stanley analyst Brian Nowak, a considerable amount of the marketplace's ad spending is attributed to Chinese vendors, and 60% of third-party sellers have at least some exposure to China. However, he also thinks that Amazon will continue to be able to provide online buyers with the best prices in many situations, thanks to its extensive worldwide supply network. According to Wall Street, Amazon's profits will rise by 10% a year until 2026. Analysts may be undervaluing the company, but that makes the present valuation of 33 times earnings look pretty costly. Over the past 6 quarters, Amazon has outperformed the consensus profits projection by an average of 22%, and I believe this pattern will continue as it depends on AI to increase revenue and efficiency throughout its operations. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Mandeep, help our Bloomberg Technology audience understand the state of the market in China. Basically, Nvidia, the world's leader in AI accelerators, but others like AMD, right? They can't access that market, but it's in that market where a lot of the activity of AI development is taking place, and there are data centers being built as well.
Yeah, look, I think we all know about DeepSeek and what it did at the start of the year. And all these models, when you think about the training of DeepSeek or Alibaba's models, it's happening within China. And a lot of the NVIDIA GPUs are still used for training of LLMs. So, the fact that NVIDIA won't be able to sell to China, which is about 20% of the overall GPU spend of around $250 billion, it tells you that, they don't have that sovereign AI opportunity, which everyone is very excited about with NVIDIA. And NVIDIA did sign up a few deals in the Middle East. But when I look at the large language model landscape, I mean, the 4 or 5 of the best models are here in the US. And then you have the remainder of the other most prominent models in China. All the other countries are still kind of investing, building the infrastructure, but they don't have the LLMs like these 2 countries have.
Mandeep, when you publish research on the Bloomberg terminal, I print it and I put it on my desk. And I have this piece on my desk from March 17th. DeepSeek to recast $525 billion capex for hyperscalers by 2032. In the context of the Nvidia story, just explain that thesis at the time and what's happened as a result of the DeepSeek volatility.
Yeah, I mean, what DeepSeek did was really forced everyone who was on the training side to look at, how much they wanted to spend upfront on pre-training and really pivot more towards reasoning and inferencing. And that's what we have seen with OpenAI, O1 and O3 models, and now with Google 2.5 Pro, a lot of emphasis on reasoning. And our thesis at that time was there is this shift from training to inferencing that's happening now. And what will happen as a result of that is that inferencing opportunity will be a lot bigger. That part will grow a lot faster. And the net result is that overall AI market will continue to grow, but there will be that shift from training to inferencing. And I think we are seeing that pan out.
According to a Financial Times story, Oracle Corporation intends to spend over $40 billion on high-performance chips from Nvidia to power OpenAI's new AI-focused data center in Texas. The action highlights the tech titans' intensifying arms race to acquire the infrastructure required to enable artificial intelligence models of the future. The $500 billion project, spearheaded by OpenAI and SoftBank Group, includes the Abilene, Texas facility. When fully operational by mid-2026, the data center, the first Stargate location in the United States, should be able to handle 1.2 gigawatts of processing power. Oracle plans to purchase about 400,000 of NVIDIA's GB200 chips, which are the company's most cutting-edge processors for AI inference and training. Oracle would reportedly enter into a 15-year deal with OpenAI to lease the center's computer capacity rather than run it directly. When finished, the Texas location will rank among the biggest in the world, confirming Oracle's and OpenAI's aspirations for massive infrastructure. The agreement comes after the 3 businesses announced a separate partnership this week to construct Stargate UAE, a 1-gigawatt AI cluster with its headquarters located in Abu Dhabi in conjunction with G42, SoftBank Group, and Cisco Systems. The UAE facility, which will be part of the wider UAE-US AI campus, is intended to facilitate the development of AI on a worldwide scale across several industries. Oracle's multi-year investment shows confidence in both NVIDIA's hardware and OpenAI's capacity to spearhead the next wave of compute-intensive applications as chip demand soars. Jensen Huang, the CEO of Nvidia, stated earlier this week that artificial intelligence is the greatest revolutionary force of our time. We are constructing the infrastructure necessary to drive the future with Stargate. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.